Hello, dear friends. Today is Friday, January 17. Let's look at the charts for the euro and the pound sterling and try to make some predictions. As we can see, the European currencies spent the first half of the previous trading day under pressure. The British currency also suffered losses, went down by weak GDP data. The UK's economy expanded by 0.1% in November 2024 on the monthly basis, while economists had focused at 0.2% increase. In the 3 months to November, the economy showed no growth. When the US session opened, traders shifted their focus to US retail sales data, which turned out to be disappointing. Retail sales rose by 0.4% in December, below expectations for a 0.6 gain. On an annual basis, retail sales also came in negative and below forecast. This helped the euro and the pound sterling recover somewhat as part of a modest bullish correction. As a result, risky currencies had got stuck in a sideways range. This range-bound trading is likely to persist until Donald Trump's inauguration. Therefore, I recommend following flat trading strategies. As for the pound sterling, short positions on the rise look more attractive, while going long remains a priority for the euro, indicating the potential for a further bullish correction. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on UK retail sales, which are estimated to have grown by 0.4% in December after a 0.2% rise in the previous month. On an annual basis, retail sales are forecast to have increased by 4.2% in December. If the figures come in above market expectations, the British pound will have a chance to strengthening by the end of the week. Eurozone inflation data will also be in focus today. Annual consumer inflation is estimated to have risen to 2.4% in December 2024. Core consumer prices, which exclude food and energy, are expected to have risen by 2.7% in the final month of the last year. If the data shows signs of ease in inflation, the euro is likely to weaken on increased expectations that the European Central Bank will cut interest rates further. Alternatively, the euro may react positively to data showing rising inflation, driven by expectations that the regulator will not be as active in lowering interest rates. As for US statistics, reports on building permits, housing starts, and industrial production are worth watching. Only negative data from the United States could lead to gains for the euro and the pound sterling. Strong US data is expected to support the greenback and put pressure on the risky assets. Nevertheless, the euro and the British currency are likely to remain range-bound as all eyes are now on Trump's inauguration and the moves of the new US administration. Now let's move on to the technical analysis. The 1-hour EUR USD chart shows that the false breakout at 1.0287 and 0262 will generate buy signals, with the euro climbing to 0312, 0332 and even 0352, a 1-week high. At this level, I recommend going short on the rebound in anticipation of the 30-35 pip move. Short positions at 1.0332 and 0312 can be considered on a false breakout, expecting a return to 1.0287 and 0262. Going long on a rebound will be relevant in case of a deeper decline to 1.0241 in anticipation of an intraday correction of 25-30 pips. Speaking of the British pound, the situation is similar. False breakouts at 1.2211 and 2171 will generate buy signals, pushing sterling to 1.2244, 2273 and the 1-week high of 2303. At this mark, it would be wise to go short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 2244 and 2273 can only be opened on a false breakout. In this case, the 1.2211 level can be seen as a target. If the price breaks below this mark, the British currency is likely to extend weakness to 1.2178 and possibly 2137. In this area, traders are advised to go long on a rebound, counting on an intraday correction of 35-40 pips. Best of luck to all, have a nice weekend.